Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this video on how to determine the best trading pairs, right? And this comes from a question by Jamie R. Shug, who said, "Hi Leon, how exactly do you determine which pairs you're going to trade for that week?" Right? And also, I also want to answer the question which was by Mugwanya Mahad. Hope I pronounced your name right. He says, "Thank you. Was good analysis for the dollar yen and how, however, sells have failed to work out." Right now, I want to answer these two questions. The second one wasn't really a question, but it was more of a statement. But I'm going to it kind of relates to the currency pairs. So how do you know? How do we determine which currency pairs to trade, and not necessarily just for the week, just in general? And really, it comes down to fundamental and sentiment analysis. Now. This is, a subject, a big subject. There's a free course in the link in the description box below, right? And there's hours there that you're gonna have to watch through. So I'm gonna give you the overall, the bigger picture, and maybe just how to look at things and fundamentals in a more simplified way if we can, right? So first things first, we know that fundamentals give a currency its value. So it would be where a country is in its economic cycle, GDP, right? And what the central bank is doing with its monetary policy. So it will be interest rates and inflation. So inflation is prices, and central banks try to control prices by raising, hiking, holding, or cutting their interest rates. Now, what you want to do, and because obviously currency pairs are traded in pairs, you're looking for strength against weakness to be the best trade. You're trying to determine a strong currency versus a weak currency, because those would be trending, those would result or should result in a trending currency pair. Obviously, a strong currency being stronger, driving prices to wherever it wants to drive prices. A weak versus a weak currency will probably result in some sort of ranging sideways market, right? As we don't know which currency, or investors won't know which currency to buy. So, and that should result in some sort of ranging market, right? So, as an example, right, the dollar. Let's look at the dollar. So we go to Trading Economics. It's a great site. Tradingeconomics.com. Go to indicators. You go to countries. It'll take you to this screen, and then on the left hand side, you have the major economies. You go to the United States, and it will give you an overview. So in the overview, what you're looking at is basically just a snapshot. The main things you're looking at is GDP growth rate. Annual as well, but mainly GDP growth rate. Unemployment is decent as well. Non-farms jobs, leading indicator of how the economy is doing, and importantly, inflation rate and interest rates. Inflation rate, month on month, interest rates, because you have to hike, hold, or cut interest rates depending on what inflation is doing. Now, balance of trade and current account is also quite important as well. So what you're doing is you're comparing the numbers, right? GDP growth rate. How well is a country's economy doing? 3.4% growth, right? 4.2, 3.4, right? You can just click on it and it will show you, the growth rate. It's going higher, all right? Yes, higher, lower, but overall it's higher. Now, let's compare that with the Japanese yen, all right? Japanese yen. You've got, look at the GDP growth rate, 0.3. And up until yesterday, they were actually in negative GDP growth rate, 0.7. All right. So yesterday's, I think it was last night, GDP report had come out, and they had pretty much just avoided recession, right? Narrowly. So 0.3%. Now, again, compare the dollar, 3.4. You've got the Japanese yen potentially avoiding recession, 0.7, 0.3. From an economic perspective, which one is doing better? Clearly the dollar, right? Regardless of what you think of Donald Trump and his policies and politics and things like that, you've got to just look at the raw hard data. That's what it is. Whatever conspiracies you think about, how data is measured and it shouldn't be measured like that and blah blah blah, it doesn't matter. This is what the big money look at. This is what the financial institutions look at. So number one, we're looking at GDP, and you're comparing the two. So number two is obviously interest rates. So if we go back to the dollar and we look at interest rates, hiking interest rates is positive for a currency, and that's based off of inflation. So rising inflation would mean, and I say rising inflation, the central banks want a target of 2% inflation overall, and anything above that would be cause to hike. Anything below that may be cause to cut or hold. So interest rates, we can see since 2016, the dollar has been hiking rates. Now, if we look at Japan, we look at interest rates. In fact, since 2016, they've gone into negative interest rates. So again, from a fundamental perspective, what one would you want to be buying, right? It's pretty much a no-brainer. Does that mean that you should all, prices don't always indicate value, right? Value doesn't always indicate prices. Plus, you've got something called risk sentiment, and risk sentiment is when you've got safe haven plays. So, again, financial institutions will look to put their money into safe haven assets like gold, and the Japanese yen is considered a safe haven currency. So while you may have fundamental periods where the dollar is, should be the one that you're buying, there might be sentiment plays, risk sentiment plays, like let's say, for example, an election is coming up where there's a lot of uncertainty. There might be war, there might be, natural disasters, etc. Right? When there's uncertainty in the market, global slowdown with, China, trade wars, etc., the Japanese yen will tend to benefit from a risk-off environment. So does that mean that when you see the Japanese yen strengthening, that you should be buying the Japanese yen? That's a question that only you can answer. But when it comes to the fundamentals, right? When it comes to fundamentals and looking at the data, if I was to hold a gun to your head, right, and I was to say, what would you put your money on? The United States dollar or the Japanese yen? You have to basically make a decision, and that's what fundamentals are about. Now, are the fundamentals so clear all the time? No, they're not. Right? When it comes to other currency pairs, we have Canada, right? And the reason why we're going to Canada is because Jamie has asked, he said, I've just finished your fundamental sentiment analysis course and I have a question. I've analyzed, no, it was this one, right? So although Canada are raising interest rates in the country must be in the expansion boom phase, well, they could be in the recovery phase as well, depending on inflation. But yeah, generally, in general terms, I wouldn't say they're necessarily in the expansion phase, but they're definitely not in recession, right? The GDP annual growth has been falling quarterly, except last quarter. Isn't GDP the leading indicator of a strong economy? Yep. I'm new to fundamental analysis, so I want to get my head around strong versus weak. So we look at the Canadian dollar, right? And Canadian dollar is pretty much middle of the road, right? It's decent. So look at GDP growth rate. Right, annual growth rate doesn't necessarily, is okay because obviously measured annually. You want to maybe just focus more on the growth rate, as this is done every, quarter or every month. I think it is every month, every quarter. Yeah, so every quarter it's done, right? So, we've got 1.1, 1.1, 0.3, 0.4, 0.7, 0.5. They're middle of the road. It's not necessarily fantastic, but it's not terrible when you compare it. When you're doing a comparison, right, with something like the Japanese yen, right? So we compare GDP growth rate, Japanese yen, you've got 0.2, 0.6, minus 0.7. It says, sorry, that's minus 0.2, 0.3, right? So there are going to be moments and quarters in time where you might get a release of, GDP for the Japanese yen. And let's say, for example, that was January, right? And then you look at the Canadian dollar, and that was January 0.4. So you have to compare at this point in time, minus 0.2 to 0.4. So in that quarter, what would you be buying? Which one would you be buying? Which one would you be selling? You'd have to be buying the Canadian dollar from a fundamental perspective. Again, we don't know what was happening from a sentiment perspective, for example, with oil, what was going on, as oil is Canada's main export. There might have been sentiment plays going on, but if we're looking at from a fundamental perspective, in that quarter, it was obvious that you should have been buying the Canadian dollar over the Japanese yen. Is it going to be clear all the time? No, but what you're looking for is edges, right? So you might have two currencies, and this leads on to your third question, which is, Jamie says, finished analyzing currencies, and three of them are neutral bearish and neutral slight bearish. Would you consider trading these, or should it be bullish versus bearish? Now you can consider trading, and what he's referring to is my fundamental analysis spreadsheet, right, where I have different, grades of strength from what I think. I'm not saying it's gospel. It's just from my analysis, right? You might have a different opinion, right, depending on what you read and how you come to your decision on what you should be buying or selling, right? Now, if you have two neutral bearish or slight bearish currencies, basically they're just varying in strength, right, and varying in weakness, right? It's not absolute. It's never bullish versus bearish, right? There's going to be obviously neutral, middle of the road currencies. There's going to be definitely bearish, slight bearish, because again, depending on where they are in their economic cycle and where they are with regards to their interest rates hike, hold, and what data comes out, etc., right, it can change. So would I consider trading these, or is it only bullish versus bearish? Well, typically, from a idealistic perspective, you would want to be trading bullish versus bearish, but you want to try and make money along the way. Now, if there are two currency pairs that are neutral slight bearish, or neutral bearish, then, and you're looking at them, let's say for example the Swiss franc versus the Japanese yen, right, and they're both on my sheet, which is my Excel spreadsheet, they're both neutral bearish, then you have to decide one of two things. Again, the question is, if I had a gun to your head, what would you trade? And if you say, I don't know what to trade, then don't trade the pair. Don't trade it. If it's not clear, then don't trade it, because what you want is an edge, right? Bullish versus bearish. Now, if you do have two currencies that are neutral bearish, but let's say for example one is politically stable and the other one is politically unstable, they're going through some sort of election and the polls are tight, and the ruling party are facing a potential defeat, and you've got other things going on, right? And there's a lot of uncertainty between two currencies, but one, again, they're both neutral bearish, but the one has political uncertainty and the other one doesn't, then that's your edge. That's your edge, right? The one that hasn't got political uncertainty should do better than the one that has political uncertainty, right? It's going through some sort of election. So you're looking for edges, right, within currencies. So that's how, and to answer the question, yes, I would trade, neutral versus neutral, bullish versus bullish, bearish versus bearish. But again, it just depends on what edge I have when I'm trading those two currencies. Is there a disadvantage or an advantage that two neutral currencies have, right? So, or two neutral bearish or two neutral slight bearish currencies have, right? So for example, Brexit, the pound would be neutral, slight bearish, right, for me, because obviously money and financial institutions aren't, looking to invest in the pound until there is some sort of clarity regarding, Brexit legislation, etc., and a deal that potentially is going to happen. Right now, if I was comparing that to another neutral, slight bearish currency that doesn't have that political uncertainty going on, then I would buy that one. But is it the best pair? Would it be the best pair to buy? Maybe, maybe not. Again, you're just looking for an edge, right? You're looking for an edge when it comes to fundamentals, and then you're looking for an edge when it comes to risk sentiment. All right. So that brings me on to, and I hope that helps Jamie and everyone who is watching this, right? That's how you really choose, your currencies. Yes, it's not, it's black and white as what people would like. Fundamentals, there's a lot of moving parts, but once you get it right, and it can take a bit of time for obviously your ideas to play out, but once you start getting it right, you'll see the benefits. And then we look to the charts to basically just time our entries and look for value as well on a price chart, which is what we do with supply and demand zones. So the second question was this again from Mugwana Mahad, right, which was basically sales have failed to work out. So he's talking about the dollar yen. So again, understanding all of that, let's go to the charts of the dollar yen, right? And at the time, this week's analysis before it came out, prices were down here, and he said that the sales have failed to work out. So again, you have to decide the probabilities, because trading is probabilities, right? It's probabilities based. This could have easily have gone, down, but what is the probabilities of this trade working out to the downside? First of all, fundamentally, just seeing that the pair to really buy is the dollar versus the Japanese yen, right? Secondly, you got to think to yourself, what is going to make on a micro level, why is this going to be a bargain price or a cheap price for the Japanese yen? Because that's what you're looking to do when you're shorting this pair. You're looking to buy at value, right? You're saying, I'm shorting this pair because I believe the dollar is going to get weaker because of such and such and such, whatever fundamental sentiment reason, and the yen is going to get stronger because of whatever fundamental sentiment reason. All right, you can't just make trading decisions based off of, we're at a supply zone, a technical pattern. I've got more of an edge over you, right? Because I'm looking at technicals and I'm looking at fundamentals and sentiment beyond what technical traders can see, right? They're just looking at with their eyes. I'm looking at the people, right, and the institutions who are controlling price, right? So if we were to look at the federal funds rate, and in fact, what we'll do, we'll go to the Swiss franc, right? And I'm using the Swiss franc as an example because they've explicitly said in their interest rate statement, right? Swiss National Bank held its benchmark interest rate at minus 0.75 in December 30, and is widely expected, saying the franc, is still highly valued. What does that mean to you? The franc is still highly valued. It means that they think that they want a weaker currency, right? I say they think, but they want a weaker currency. A highly valued Swiss franc isn't good because they want to try to stimulate inflation. And if you stimulate inflation by having a weak currency, So they're saying, and they're telling you that it's highly valued, right? And the market continues to be fragile. GDP growth is likely to weaken somewhat in 2019 amid global political uncertainties and protectionist tendencies, right? And you can read the statement, right? But they're looking at the economy, they're looking at everything, and they're telling you what it is what they're expecting. These are the smartest guys in the room, the Swiss National Bank, and they're telling you that they think it's still highly valued, right? And they expect the global growth to weaken, and there's going to be some political uncertainties due to political uncertainties. So if they think that it's highly valued and they want to weaken the currency, right? Here it says the franc is virtually unchanged against the euro. Overall, the Swiss franc is still highly valued, and the situation on foreign exchange market continues to be fragile. Negative interest rates and SMB's willingness to intervene in the foreign exchange market as necessary remains essential. If you don't know what that means, basically they will potentially intervene and try to make their currency cheaper. They try to buy their own currency, which isn't good. I say it isn't good, but it's a measure that they can do to weaken their currency, right? So if they're looking to intervene in the market, and this is from their statement, remains necessary and remains essential, right? They're trying to have a weak currency. They're trying to control prices. So they're going to do whatever it takes if the Swiss franc gets too expensive, which means that what should you be doing? Buying or selling the Swiss franc? You should be trying to sell the Swiss franc. You should not be trying to buy and bet on strength, right? And it's the same thing. If we go back to this, the gentleman who asked sells failed to work out, fundamentally, right, you have a strong versus a weak currency, the strongest, right, out of the major currencies versus probably one of the weakest. What is the probability of that working out? All right, you also had this week, this week you had on Wednesday, yesterday, you had core inflation, right, at 2%. And again, if you go into detail, one here, it would be something like this, where basically overall core inflation was as expected. If not, it ticked. It was slightly positive, slightly bullish, right? And so you had a positive dollar because inflation rising continues the interest rate hiking cycle potentially, right? And the Japanese yen, all right, on last night had their preliminary GDP quarter figures, right? And it was just released. So at the time on Wednesday, yesterday, right, you had in the lead up to prices rising, you had positive news for the dollar, right, which obviously led to this move higher in anticipation right here, right? And then you had some decent news for the Japanese yen, but overall, the pair you really should be buying is, and again, it's not financial advice. I'm not saying that we're going to be right every time, but the dollar would have been the pair to buy unless inflation came out and it was really, really negative, and then you'd be probably selling simply because there was a unexpected inflation figures, and that would obviously affect the Federal Reserve's decision to either hold or potentially even cut interest rates or reduce interest rates, because again they want to stimulate inflation, right? But we had positive news on the dollar, decent news on the Japanese yen. They avoided recession, but again from the bigger picture perspective, looking at the data, right, GDP growth, just because you have a quarter of decent growth, why would you be buying the Japanese yen? So all you do is look for pullbacks, right, into levels of demand, right, and then so on and so forth. So probabilities is what we're looking for, and we're looking for edges. If you're trading a technical pattern based off of just supply and demand, then you're really at a disadvantage. You might as well just trade support and resistance, and do that. There are things beyond a technical price chart as to the reasons why you should be basing your decisions on, either buying, getting long or getting short at certain levels. And the probabilities, was really to the upside. Not saying I would have traded a breakout or whatever it is, but if you're going to ask why, then, the short didn't work out because it was the odds were stacked probably against the Japanese yen, and this obviously proved not to be value for the Japanese yen. So hopefully that all made sense. It's a bit long-winded, and some traders probably would have switched off by now, but if you did stay to the end and you got the information, that's how you determine your trading pairs, right? That is exactly how you determine your trading pairs. Look to see which currencies are strong, weak. What advantages does one currency have over another? Is there uncertainty going on? And then you look at the price chart, look where it is. Is it at a supply? Are they at a demand zone? And then you make your trading decisions based on that. So please subscribe, and please share if you enjoyed it and found this useful. And guys, have a great trading week and take care.